What's up, guys? It's Goose from the Wise Wealth Discord coming back at you with another Sunday watch list. Just wanted to give you guys a little update on some of the levels we're looking at. Let me go back, make sure that I'm here. What's up, guys? It's Goose. I'm ready, man. It's such a big week. We got so much things going on. I'm going to start off with some of these things, the important economic data and some of the events that we have going on. Jimmy had mentioned it in the Discord. We have Jolt's job openings. This is Tuesday, July 30th. Consumer confidence. Lots of red folder, as you can see. Employment cost index, non farm employment change, federal funds rate being decided on, FOMC. FOMC is always a big, big event, can change the direction really fast and kind of the narrative in which the market is moving on. FOMC press conference, unemployment claims, ISM manufacturing Thursday, average hourly earnings, non farm employment change, unemployment rate. So lots of big, big red folder news this week. So we're gonna have a lot of volatility. That always brings a lot of excitement, a lot of emotions into the market. So that's why we like to bring it back, come back to the levels, the supply and demand levels that we're looking at, and just really make sure that it's there in which we want to play it out based off of. We don't need really anything else past that. We just need good levels and then a little bit of an understanding of what events are to come. We're going to start off with the SPY per usual. What happened last week? Kind of exactly what I was trying to predict last week. I'm not saying I'm a wizard or I have the crystal ball, but I was saying that we could get a short term bounce followed by another leg down. That's kind of exactly what happened. If you want to break it down into like let's go to the daily, I guess. We could see that we had a short term bounce Monday, Tuesday, and then we had a huge drop going into Wednesday, Thursday, and then we started to recover. We did want to see this level be held, which it was. It fell down, and then the Bulls actually had a pretty good buy back up. You could see that on Friday, though, it kind of closed a little bit weaker. Same with Thursday. It closed really, really weak below the level. So right now, we're just kind of flagging in here. We're in a really nice range. So anything above 550 is a good buy, in my opinion. I think it could start to reach the 555 level. Then anything below like the 538, 540, you're starting to get a little ugly. You could see maybe another support around 530 if that is lost. Um, it played out pretty much to perfection. I didn't get in any shorts, but I did start to like with the extreme sell off, you could see that the RSI was starting to get sold off on a little bit of bigger time frame. Once you start to see these levels, these are kind of attractive prices in which you want to start maybe nibbling on some longs or buy some longer term stocks. It didn't quite create the head and shoulder all the way over here, but you could see that we had that short term bounce that I was speaking of, and then another leg lower. We could be in the middle of doing that again. We're not, too sure, but it right now the market overall does look a little bit weak since the huge sell off that we've had. So you just want to kind of continue to watch these levels, see if this flag plays out. It's a nice little bear flag to play. If it does get above 550, I think we're cooking. I think we could start, possibly working our way out of this big downtrend that we've started. The charts are very messy. I apologize for that. I probably can clean this up a little bit. Um, Potential head and shoulders. We did get that leg down. So a lot of the equities, like the individual stocks, NVIDIA, Apple, Tesla, you can see that they are bear flagging as of right now, just like indexes are. So we're watching this closely. Anything above 550, I think, is a good buy. Anything below 538, 540, it starts to get a little bit ugly. We have a gap down here that potentially could get filled in the downside. Nothing too concerning. We were due for a pullback or a correction. Right now, it's just considered a steep pullback because I think we're around like 8%. Correction is anything 10% or higher. You get it, but usually on average about one a year. So maybe we got it out of the way finally. SPY only 4%, 5%. Qs have been a little bit more steep as per usual. They usually move a little bit more. That's why I like to trade them. So like I said, just watch the levels. 538, anything below that, more selling. 547, 550, below that, we're cooking. We can go right back up. maybe test all-time highs again. Qs, that's the steep sell-off that we've seen. Same kind of play that I was expecting is a little bounce in the start of the week where it's usually most green. But Qs were almost at that correction level. You could see we're at a 9.8% drawdown, which is a really good drawdown. But you back it up, and it's like, are we really concerned? I mean, yes and no. Obviously, you don't wanna get in at, like, a bad time when the knife is falling. You don't wanna try and catch the falling knife, as a lot of people would say. But it's just a steady, you get your corrections, you get your pullbacks here along the way, but it's still a steady uptrend as of right now. It could continue to sell off. If it does, 448 would be a good spot. Let me go back down to the 15-minute. So as you can see, we're flagging again. We have a little bear flag to play off of. Futes right now are jumping pretty high. You can see on the right side of my screen, futures are moving almost 0.75 there. So it kind of fits with my thesis in Discord where I was saying I wanted to build calls, based off just simple flows in the market. You kind of get used to certain days and certain times throughout the week and when people start to pile back in. And when you get to these extreme levels of oversoldness, I think that's the attractive part of getting calls around there because 9 times out of 10 stocks are going up. So when you see these pullbacks, those are great times to be accumulating on the long term side of things. And when it comes to options, you want to be waiting for the supply and demand to make sense. So if it can get above this supply level right now at 467, we can cook right back up into the 480 range. If we lose that at 455, then we still have more to go. I could see 450 being a really solid support level with a lot of like consolidation here. So we have some nice levels to play off of. I don't think anything's too drastic right now, but my thesis on Discord was, start to accumulate some calls or some long side things around Thursday, Friday as the week starts to slow up a little bit. And then Friday could be a good push, which we got a percent green on Friday into Monday. And now you could see that future up a decent amount. Futures are still kind of like flat though. It's just kind of a dead cat bounce. But this is exactly where you wanted it to see it bounce. This is futures on NASDAQ, by the way. So it's kind of the same thing as the Qs is we're just kind of consolidating. So I'm not saying we're out in the clear yet as far as bulls are concerned, but a slowdown is always good because 9 times out of 10 stocks are going to continue to go up. And we've had such a strong trend this year where, you know, most likely it's going to keep going up. But until proven otherwise, if 455 is broken down, then we could start to see the 450 level. If 467, 470 is broken, then you could start to see the 480 level on the upside. So we got a nice range to play off of. I'm aware that it's been a pretty big sell off. You can see on the weekly, we've had 2 red weeks in a row, resulting in a nice little correction. But these are expected. These are things that you want to see on a strong, strong trend. If the bulls can start to work their way up, that's going to be huge. IWM, they still have that beautiful break. You could see they had a good week last week. You look at Qs, red, SPY, red, but IWM green. So that's why it's showing strength compared to all the other big indexes that we watch. And that's good. That's a really good thing because it shows you that there's rotation. It shows you that there's a little bit more belief than just the big tech uh, companies that have been riding it along. But we got a beautiful bull flag forming for IWM. So anything above 225, I mean, we are cooking. We are just going to spring forward because this was a huge break. So we had a nice little cool off, range, break. We're gone. 230, 240. We could start to work our way up towards all-time highs. I'm going to back it up just to show you, where all-time highs is, where we're at in comparative, right in this range. So it's like anything around 233, 240 is going to be huge, huge resistance. It's going to be hard to work through, but we have a nice, beautiful bull flag that we could work off of. And I think IWM with rate cuts being in the forecast for October, we might get to see a little bit more bullish action from them leading up into the rate cuts. But beautiful bull flag that I've been wanting to long IWM short QQQ has kind of been my saying the last couple weeks, and it's playing to perfection because as you can see, QQQ selling off, IWM, just flagging, looking good, basing up. So those are things you want to see. Jimmy posted futures there, really ready for a breakout. It's pretty dang close. 2300, you're in official breakout mode, and we're going to the moon with that one. So we're watching that closely. I'm going to get into equities now. We do have cryptocurrency before we get in there. We have a beautiful range that we're working with on Bitcoin. It was finally breaking down the 55K range. We thought maybe 50K, but it didn't quite get there. Now we're back in range with the beautiful flag. Anything above 73,000, we are going to fly to 80. I really do like Bitcoin in the longer term. I think there's great potential there for some good returns if you just accumulate certain stocks like Coin and Riot, maybe even Bitcoin itself or Ethereum. But if you believe it in the long term, these are some of the best times to be buying is when it's accumulation phase or distribution, I guess, if it does sell off. But going into Apple, I posted a Head and Shoulders. I'm not sure if my screen changes or not. Um, but I'm going to go to the technical analysis. Possible Head and Shoulders playing out resistance around 233. If broken, it could be a solid sell off. That was posted at 228. So we come here, look at, the level that 223 was at. It was broken down and there was a huge flush. But now what do we see after a big move? There's a little bit of a consolidation, a nice little bear flag to play off of. So now we have some nice even levels to play. You got support around 216 and resistance around 220. Nice range to play. If 220 is broken, then you can go right back up into the 225 range. 216 is broken, you can go to the bottom of this range at 207, 200. This is a big level to play. This is a huge resistance level, and they're just trying to hold it. The bear flag doesn't look really good, as most stocks don't, because of what I was showing you on QQQ. There's just a bear flag, SPY, bear flag. So a lot of the stocks are going to resemble the same thing that the ETFs and the indexes are showing. So right now it is weak, but like I said, you get that 10% correction, and then what happens typically is people start to buy that and they buy the dip, and more people add on the dip. So as dip buyers come in, you might get that little decent rally, but that's why you watch these levels in the upside, that it's like if you get that short-term bounce, how high does it go? Because now these supports and these things that we're flagging up, those are going to be resistances. So 224 is resistance, 228 is resistance. But as we break through these levels of resistance, those are good points to be buying calls. If you're kind of following what I'm saying, we got Microsoft. It had its buy up. It started breaking out all the way above, and then it just couldn't quite hold it. So anything above 433 is a great buy, in my opinion. This is all just my opinion, but as you can see, we're flagging. There's not really much like bullish structure yet. But when you have these pullbacks, those are usually good times to be buying long term, you know, accumulations of stocks on the uptrend. Because as much as like, you get a couple weeks of selling and it gets all scary and people start saying, "Oh, we're gonna crash." It's like realistically, look at how much we're going up. I mean, this is Nvidia, a crazy AI stock, but look at that. I mean, are you really that scared if it comes down a little 5%? If you're playing options, sure, of a timing thing. But if you're just accumulating in the long term, these are prices that you want to be, dollar cost averaging in are those weeks where it is red. NVIDIA did break out of its little flag that it had going, so you really need it to get above 117 and start to capture that level again to start becoming a little bit more bullish. Anything below 110, 111, you could start to get a little scary. Maybe go test the 100 level because there's a gap below that hasn't. I mean, I guess it's been filled with this little wick. Grabbed a little liquidity there and then just kept going. So we'll see. Like I said, a lot of things are starting to break down and start to look a little ugly. It's not to say that this week couldn't continue that trend and go for a third week in a row, but usually once you get into that correction territory, how much further do you really think it's going to go? Are we going to enter a bear market where it goes down 20%? Odds are not in its favor as of yet with some of the news we have, but that's why we watch things like the FOMC and consumer confidence and employment change, the federal funds rate. These are things that can change the narrative very, very quick. And as those things start to change, that's when maybe you can see some of these technicals playing out. That brings us right into Tesla. That one's a possible decent short if it does play out. It's bear flagging. So it's like if it comes right back up into 232 where that big support was, that can turn into resistance and then do another leg lower. If it does break below the 212 area, 205, 200 would hopefully be the next support area for a good bounce. It is, I guess in the bigger time frame in a downtrend, so you could see this big, big trend that it has going on where it's like it's just not quite catching on to it. And a break above that would be beautiful. It's not quite getting there, but that's kind of the denial area that we're at. Hopefully, you can find support around 200, 207 if we do break down and then work our way up. Because if we get above 270, 300, that's where the real break happens. It's just kind of a waiting game with a lot of this stuff, especially with options. Meta, this is the weekly. You could see that it had its peak above and then it broke back down. It's what you call a false breakout. But we have a nice, 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 nice support at 450. It's really holding that level pretty well. You could see that it's had multiple times where it's touching it. So holding 450 is beautiful. If it could just start to work its way out of like this flag area, start to get above the 500 area, it would be beautiful. Let me go to the 15-minute. Still weak, still a downtrend as most stocks are looking like because of the ETFs and the indexes being in a downtrend. So it's like hopefully it could flag, coil up, and then if it breaks out of this uptrend, that's a beautiful play for options. Beautiful. AMD, pretty one of the weaker names out of like all of them. They really have been like kind of falling apart. Last week, I remember showing you that it could get denied up here due to this downtrend that it's starting. That's kind of exactly what happened is there's just a denial up here, and now it's another leg lower. You have a higher or a lower high and then a lower low, and that's what shows you a trend: higher high, higher low, lower high, lower low. And it's like there's two difference, either going up, down, or sideways. This is sideways, this is down. So it's like it's kind of self-explanatory, but that's why I have these videos to consistently show you as they progress throughout the week on what's happening. We started a little bit of a downtrend last week or the week before that, and then the video was like showing you that we could have a little bit of a buy up, but that creates the lower high. And then do we create a lower low? And that's exactly what we did last week is created that lower low. But that's why you just watch levels to see where it finds support at. Where is it going to start to find demand? Where are dip buyers looking to put in? And you'll start to see volume start to increase. It'll get lower as it comes down, and then there's a big pop. And it's like when it comes to options, that you're looking for the big pops, the big moves. So Google, they didn't have the best earnings in the world. It's crazy, the difference in earnings. You have this candle right here. That was earnings that completely just destroyed shorts. And then you have this candle right here that paid shorts out. So what basically is like I'm trying to say is these pullbacks aren't nothing to really be afraid of. It's like, yes, it's a few days of selling. Oh my gosh, everything's crashing. But you look at the uptrend and it's like, are you really going to be afraid to be accumulating at 155? I know I'm not. It depends on some of the data, the economic calendars and stuff like that. If things start to turn bearish really quickly, like, oh, unemployment's rising up, inflation's coming back, then yes, of course, you're going to play the level and be a little bit more bearish or less optimistic at these 155 levels. But as of right now, that's not the data we have. So I don't think there's any reason to be super bearish. There is a gap right here at the 161 level. So if that starts to break down, it could get a little sketchy. Bear flagging as of right now. There's a huge sell off. So hopefully it starts to slow up here and find support at 165. If it doesn't, we could start to fall down the 160 level. Amazon, same thing. Just kind of in range. Nothing too crazy. Like it was definitely a sell off. Don't get me wrong. We had the peak above and then just lost it. Now we're right back in range. So we have beautiful levels to play. Above 190, we're gone. Below 170, I mean, see you later. We lost everything. Bulls are just losing everything. Bears are in control. I just say that in a joking matter. I mean, We don't really know exactly what's going to happen, but we like to play levels to give us the best possible chance to win. Amazon, you got a nice little falling wedge to play off of. You can see the wicks. It's just getting denied, 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 filing, finding sellers. But this is a huge support level to hold. If it can hold the 630 level, we could start to move above 650. Then we could start to get around the 700 area again because it's a nice little coil action. But you got to hold these levels. If you start to lose 630, then you're at risk of the 600 level, and sellers could take control. Um, a lot of data coming out this week with the red folders, so we'll probably get the big move, even if it's going to go right back up and spring towards all-time highs or go back down. Baba, that was one of the ones that I had last week that I'm playing. I'm been accumulating some calls August expirations, the end of August expirations. I like this spring action that you're seeing. It's kind of what I was just showing you on Amazon. A lot of wicks going down, but as soon as you start to break above this and we can get above 77, I'm pretty sure we're going to be gone up to the $80 level. That's just my, personal opinion. Chinese stocks have been beat down a lot, so I kind of like buying the extremes and the undervalued things and stuff like that on the dip, because when people are freaking out, that's when you want to be buying. When people are super greedy, that's when you want to sell. SMCI, it fell out of its bull flag that we've been plotting for a while, but there's still a solid support here. You could see the wicks here are still holding it relatively well. I know I had the flag, going sideways a little bit, but if you draw it more straight, there's obviously a solid support here. One touch, two touch, three touch. So if it could hold this, it might be able to work its way back up. That's the daily. So let me break it down in the 15-minute. Just another bear flag, as every other stock has been in. It's just really trying to base it out and build the support here. Sellers could obviously step up and continue to keep sending this down. I'm not saying that the selling is over, but I like to get a little bit more optimistic after a correction has been done. Your odds of making money in the upside or the long side are a lot better after a 10% correction rather than before, like the past month in July when you're up 10% in a month. It's like your odds, your risk to reward is not really there when you're way up high. But when you come down and you have that sell off and there's fear there, that's when you generally want to be buying. And if you can get your psychology there where people are fearful to buy, you're going to set yourself up to be a pretty successful trader, in my opinion. But being successful as a trader, you just got to join the Wise Wealth Discord, man. That's all you got to do, and you'll be good. But other than that, I mean, not many other stocks I really wanted to go over. BABA is one of my favorites for this week ahead. I do like how Chinese stocks are acting, IWM as well, because you could see the strength compared to the QQQ and the SPY. But if QQQ does start to work above the 470 level, maybe we could start that bullish momentum if we get some good FOMC movement, some good unemployment claims, whatever it is, and then a lot of earnings this week. Some of the big ones that Jimmy was mentioning were, let's go back here. Amazon, AMD, Meta, Microsoft, Apple, ARM, these are all going to move QQQ a lot. So you really got to be careful when it comes to big earnings like this. You typically want to start to reduce your position size because the overnight trading, especially for option trading, is going to destroy your premium. So it's like be very, very careful and vigilant. And our point is to accumulate wealth, not lose it. And if you do accumulate it, you don't want to over leverage and put too much money into a trade to where you could affect your overall, profit to loss, your P&L. So I hope this video helped a little bit. We're going to have an amazing week, a lot of news dependent and just some good levels to play off per usual. Hope you guys have a great night. Let's get to it tomorrow, man.